All right, guys, let's start the best live streaming stock market show on YouTube. Do this every Wednesday, so make sure that you have liked this particular live stream and subscribe to the channel so you can get notified of all future live streams. If you're watching on Twitter, welcome, and Facebook as well. Thank you for joining us. Hey, incredible day for the stock market. You had the S&P 500. It was up to 2.6%. That was the best day since June of 2020. So what are we talking about? Like almost like 19 months there or something crazy. I mean, that's an impressive rally today. S&P 500 was up 108 points. So 107, okay? Self-correcting on the fly here. 107 points. Then you also had the NASDAQ up like a resounding 3.6%, plus the Russell 2000, which was up 2.7%. So you had a lot of money flowing back into the large tech stocks. You had Apple that was upgraded, so it was leading the charge higher. You have Bitcoin. It was up 7.7%. And then you had oil that was crushed by 11% today on news that Iraq had some production capacity that they could offer the market. So make sure that you guys are posting your charts or in your stocks in the comment section. I'm going to go through every one of them here, and as long as it takes, and we'll figure out this market together. Is this a dead cat bounce? Are we looking at another sell-off tomorrow with the CPI report coming out? That was the big thing. So I've been bearish most of this year. I've taken a few long positions here and there, some successful, some not successful. I got all out of my short positions yesterday, not by choice, but more because I got stopped out of them for profits. I was long on QID, which is an inverse ETF of the Qs, NASDAQ 100, plus I was long on RWM, which is a 1-to-1 inverse of the Russell 2000. I got out with about a 0.8% profit on the Russell 2000 short, and I got out with about an overall 7.5% total on the QID trade. So it was two profitable trades, one much more profitable than the other, but nonetheless, I wasn't in them today. Thankfully, I'm not in them today as well because the market was just a straight up ripper today. So I'm going to go through all the charts. I'm going to go then through your charts as well on the stock market. I can already see some of them popping in here. We got Microsoft. We got Kevin Hawthorne from Lakeland, Florida. So great to see you guys in here. Keep posting your charts because I will go through all these comments and start knocking out each one of them. So the big question is CPI report tomorrow. Expectations have it at 7.8%. We've seen oil go through the roof in the month of February. Now, CPI reports can be based off of what happened in February, but we saw a very strong month for oil, wheat, fertilizers. Everything's been going through the roof. Now, the CPI report for January was 7.5%, so they're only really expecting a 0.3% increase. To me, that seems a little bit light. I can see it easily being north of 8%. So if it comes north of 8%, you're likely to see a pretty significant sell-off tomorrow. Now, we saw that back in February, too, when we had the CPI report come out. The market did not like it, and it completely reversed and spiraled lower. I think that there's a good opportunity for that to happen as well. I just don't see where the economy is getting better. I mean, right now, here in Florida, I mean, we usually see gas prices like, $2.50, and the worst of times, we're seeing gas prices hitting $4.50. So it is crazy down there. I know it's even higher in other parts of the country and throughout the world, depending on where you're watching this from. But I can't see a situation where that CPI is going to be good tomorrow. I don't know. Maybe they massage the numbers somehow and they can get it lower. I would never put that past them. I mean, I think it's been done in the past. Who knows if they would do it here just to keep things from getting too crazy. So CPI report, it wasn't worth it for me to chase the market higher today. Yes, it was hard to stay on the sidelines and watch it go higher, but I feel like ultimately, if I'm looking out for my capital, not trying to swing trade and hold a position overnight into that CPI report was the most logical course of action for me. So again, make sure that you're subscribed to this channel. Make sure that you're hitting the like button for this video and keep putting your questions there in the comments. Let's go ahead and look at the one more thing I want to talk about on the CPI report too. It's all about Russia and Ukraine right now. That's what the market's been focusing on. That's why you're seeing oil go through the roof. What if, and the reason for the market rally today was because of the Russia-Ukraine talks, or optimism about the Russia-Ukraine talks and the potential for a ceasefire in the future. That's essentially what the whole market rally was about today, and the Iraq production capacity to help ease pricing pressures, which I don't really think is going to do much to ease the oil pressure from continuing higher. But let's say that the next round of talks is successful. Let's say the CPI comes in hot. Let's say it comes in at like 8.2% tomorrow. Then what are you going to have? You're going to have more talk again about raising rates by by 50 basis points at the next Fed meeting. I mean, if it comes in hot, even if there isn't substantial progress in the Ukraine talks with Russia, there's still the potential, if that CPI report comes in very hot, people are going to be talking about the 50-point rate hike here. And so while that seems like it's off the table right now, depending on how that CPI report turns out, I think it could be really crazy. So let's go ahead and get right to these charts here. 9 out of 11 sectors traded higher today. What were the two that finished lower? It was energy, and I got them here on the right side of the screen. It was energy and utilities, okay? Why is that? Energy was selling off because of the news that was coming out of Iraq and the fact that an increase of supply would help meet the demand, which would lower the price pressures from continuing higher. Now, utilities tends to be a safe haven for stocks, for investors. People want to put their capital in stocks like that are in the utilities, that are in the staples, that are in real estate when there's a lot more uncertainty. So as the uncertainty has been increasing over the past week, utilities have been going higher. You take a stock like NEE, Next Era Energy, was doing really well. But once you got that bounce, that's where you saw the pullback. And so utilities is a safe haven. It pulled back just a smidge. And then you had energy as well that had a significant sell-off today. So imagine how high the market would have been if all 11 sectors were trading higher. It would have been impressive. So with that said, let's look at S&P 500. So you have this head and shoulders pattern. I've been highlighting this consistently in most of my live streams here. This head and shoulders pattern goes all the way back to July of last year. So you got price sitting right on this neckline, just a little bit above it, but it's essentially, follow through will be a key for it tomorrow if it really wants to change the narrative on this market. Plus, you have this left shoulder, head, and then you have the right shoulder, forming a nice head and shoulders pattern for this market. Again, we broke below it on Monday, followed through it on Tuesday, and then had the massive rally today. But I would not necessarily say that it's reclaimed that neckline there. Secondly, it has a declining trend line. It's been tested on multiple occasions, going back to the January highs. It was tested in mid-January. It was tested again in early February, pretty close to it in March. And so you can't really get bullish on this market until we can sustain the move above this neckline and break this declining trend line. If it does that, yeah, there's a potential to get much more bullish on it, especially if it can get back above the March 3rd highs. Gets back above that, then it sets up for a challenge of the right shoulder, which if it was able to get this high and break the right shoulder, you would effectively nullify this massive head and shoulders pattern, which would be huge for bullish traders. So that's the whole scenario with the S&P 500. It's also why, in addition to the CPI report coming out, why I don't necessarily feel the need to get long on this. Yes, if there wasn't a CPI report tomorrow, I could see myself maybe trying to swing this for a couple of days, but I would be aggressively taking profits no later than this declining trend line. So it's important to take profits along the way, and I'll talk about that a little bit later. Let's look at the Qs. And again, make sure you're liking and subscribing. Make sure that you're also posting the stocks that you want me to go over. I'm going to make sure to go over every one of these. It'll also be available afterwards to rewatch this live stream. Qs, similar head and shoulders pattern here, but it's much more at a slant. Not quite there to retest the neckline. You also have this declining trend line as well on the Qs as well. Qs has been much more messy, but it's been much more volatile as well. So until it can break back above the declining trend line, I don't have much faith in getting long on the NASDAQ as well. So I think a lot of people will be future bag holders that bought in today. That's my sentiment on it. The one thing that makes things kind of interesting here is that both on SPY and on the NASDAQ, we didn't break new lows on this latest downward push. So you have a slight higher high, which makes it very interesting because you could essentially, if it can get above this March 3rd highs, you could essentially have a higher high, okay, right up above here, and then a higher low, which was formed back on yesterday. So that can make things very, very interesting. Same thing on SPY. We did not make a new low here. If it breaks above this March 3rd, you have a higher high and a higher low. So keep your eye on that. And I see you guys got Amazon, PayPal, we got DKNG and Microsoft. Now I'm going to get to all those. Next one, IWM. A little bit of a brain fart there, probably because I forgot to pour myself a glass of bourbon before doing this. Massive resistance overhead, nowhere near close to breaking above it. Now I was short this earlier this week. What makes this where I'm less inclined to short it again, it's just pure choppiness. It's just maddening trying to short this one going back to late January. Yes, you had a nice sell-off in early January and into the halfway point. But since then, it has been very, very choppy. It's just up and down and up and down. And so we're not getting really any clarification on direction. And if the tech continues to have like a .com-like reaction in the days, weeks, and months ahead, you could see some people put their money in Russell, which would mute the sell-off in small caps. So that's that. You also have the declining trend line as well off of the January highs. That's kind of getting redundant, but nonetheless, we haven't broken above it yet. So very close to wanting to challenge it if it can string together another couple of days of wins. So after hours trading too, you have CRWD post some solid earnings numbers. And what is it doing? It is rallying hard in after hours trading. You can see here it's up about 22%. Bull flagging here. Never want to try to hold through an earnings report as a swing trader. At least that's my personal rule. When you do that, you're taking on way too much risk. Let's say you were wanting to be short crowd. Now you're down 22% on the trade. It's a very, very difficult thing to trade through earnings. But there's a lot of people out there that will buy a stock right before earnings in hopes that they can capitalize big, only to get their heads handed to them. You know, a la Facebook, Netflix. You've seen some massive sell-offs there. Did Amazon have it? See, that might have happened because I did notice that the futures were popping. So if Amazon, yep. All right. So we got an Amazon. We got in the comments section some breaking news because I wouldn't have known that being on the live stream. But if they're doing a 20-to-1 stock split, yeah, I mean, I'm not a huge fan of stock splits, guys. Here's the reason why. I don't mind that they do it. It doesn't add any value to the stock. People say, well, I can actually buy more shares of it. It doesn't matter if you can buy one share or 10,000 shares, but it's the same price. Or in the Amazon case, if you buy one share at $30 or, take that and divide it by 20, and you can buy 20 shares of it, you still have the same amount of capital allocated. It's not like it's free money or anything. So people get worked up about it. I think the Amazon stock split was long overdue. They're probably wanting to get into the Dow as well. But they haven't moved anywhere for a long time. So they're probably saying, hey, you know what? If we split our stock, maybe that'll change things. I would not get too excited about it. Amazon did not just add, $130, $140 billion to their market cap because they split their stock. That's just most of the time too. These stock splits, they come right back down. So not a huge fan of chasing it. I wouldn't do that one bit. So, but thank you to Ultimate Trader for posting that comment because that happened while I was on live here. But yeah, you've seen it with a number of stocks now where they'll do their stock split and we get all excited about it. I wouldn't get too excited about a stock split. I know that there'll be a lot of people chasing after it. There's even people that thinking that they're multiplying their money by 20x because of a stock split. That shows you how much craziness there is in the market right now. But no, I wouldn't be too. I could care less, honestly, about a stock split. But thank you, Ultimate Trader, for sharing that. Okay, I'm going to get into some of y'all's charts, and then we will continue it with the VIX, and we'll continue it with some Bitcoin charts as well. First up, Microsoft. Let's go ahead and pull that chart up here. Are they getting some post-market love here? I don't know. No, not really at all. So what do you have with Microsoft? Well, you have a head and shoulders pattern that, just like with the NASDAQ, that has formed, broke below it. Unlike the NASDAQ, let's see here. I'm trying to make sure I draw that one pretty nice and clean. This is almost like a textbook head and shoulders pattern, except for the fact today that it reclaimed the neckline of the head and shoulders pattern. So let me go ahead and put it in there for just regular hours so we know what we're looking at. You have a declining trend line still in place there, not really able to break above it. It's tried on a couple occasions, but to no avail. I would not like this particular chart. Yes, it's finding a little bit of support here in recent days where it's been bouncing right there, but would not get excited about it until it can break that declining trend line and move higher from there. Also say too, maybe even on Microsoft, probably forget about the declining trend line off of the January highs and focus more on this shorter term resistance pattern that's trending lower. If it can break above, let's say for tomorrow, I had an unbelievable day and it can break above 301, then I think you can get a little bit more bullish on the stock. If it breaks below this support level, a slightly declining support level, that's where I would get much more bearish. But right now, it's just in a choppy mess. So that's kind of like the IWM, even though the two aren't related. IWM has got a very choppy pattern of late as well. DKNG. Did you guys see the CEO of DKNG? He was trolling anybody that had sold the stock to make it their biggest life regret. I guess he's a little full of himself, though, considering the fact that he can't control what the market thinks about his stock. But again, you got a lot of choppiness here going back to late January. I would probably say if this price level breaks, let's say it breaks below Monday's or Tuesday's lows, I would get a little bit more bearish on this stock. I'd say that's probably the next layer or next leg down on the stock, and who knows how low it can go. That would be probably around 1688. So if it can hold 1688, that's a good thing. Now, where do you get more bullish at on this stock? Well, since it is trading in a sideways pattern going back to late January, I would get more bullish at it probably around 2580. Now you might be thinking, Ryan, that's like 30 or 40% above where it's currently trading. That's a long time to wait. Yes, it is. But otherwise, if you just keep trading inside this trading range, thinking that it's going to, the bottom is in, well, you risk the fact that you're just going to be churning your capital sideways for who knows how long. So for me on DKNG, I don't want to be buying this stock until it can break out of this base. I mean, if it gets above $25, I mean, there's plenty of room for it to run. It's not like it hasn't been above $70 in the past. So feeling the need to have to get in at $17 when it's on the cusp of breaking down is a higher risk trade in my opinion. So good questions there. We've already addressed Amazon, Microsoft. We got Ben Ho. I don't know if I said that right or not. I pronounce words usually wrong, and especially names as well. All right, PayPal. This is an interesting chart. I actually posted this on the YouTube membership channel. If you want to get all my stock market research each and every day, click the join button down below. So you're going to get all of my market research. That's going to include watch lists, setup possibilities. One of them today was PayPal. So what I was looking at with PayPal was this long-term trend line here that goes all the way back to 2018. Really, really interesting support level. So far, it's held it. It went all the way down to like $92 and held the support level. Now, it's not a trade setup if it breaks below 92 at this point. So if it gets like 91.90, I would be out of this trade in a heartbeat. It's sitting at $100 right now. Much more, very, very clean. It's definitely a bounce opportunity here. Whether or not it can stick the landing is the key question here. If the market continues to trend lower, there's nothing sacred on these support levels. If the market is indeed put in a bottom, this is a great place to get in at. So the key is to make sure that you're managing the risk on all of your trade setups on something like PayPal. This stock has been hammered. It's gone from over 300 down to 100. There's nothing to say that it can't throw in another $50 to the downside. Okay. That's PayPal. But yes, on PayPal, I love that. Let me go ahead and put my head way up here so you can see it. I didn't realize I was blocking it, but huge support level right there that goes all the way back to 2018 and holding so far. So it's really, really good. You guys are all about the FANG stocks today, man. Look at you guys. All right, WYNMY. Golly, that's a hard one to memorize. WYNMY. All right, what am I missing here? I don't know. I don't have any. It looks like just like that my TC2000 went out. So, oh, there we go. WY. There's actually a pretty heavy thunderstorm outside, so that could be affecting it. All right, we got WY and MY. I've never traded this one before, but Macau, head and shoulders pattern trying to form here. So what we're looking at, left shoulder, head, right shoulder. Can it break above this $10 level? If it can, then it becomes a very bullish trade setup there, okay? But until then, you're kind of in the process of catching a falling knife there. This is a massive head and shoulder, inverse head and shoulders pattern. Needs to get back above this like $9.92, $10 level to get bullish on it. Google. Let's look at this one here. So for me on Google, sideways trading pattern for a long time. This goes all the way back to July. They're probably going to be the next company to split their stock, right? Rising trend line off of what the March COVID 2020 lows. So far, it's holding impressively, right? See what I'm talking about there? Actually, you can't because my big head's blocking it again. All right, so rising trend line. This is the white line going all the way back off the March lows, still holding. Then you got this sideways trading pattern going all the way back to July of last year. So something's got to give, right? Either we break down and break below this rising trend line, and that would also kind of confirm this head and shoulders pattern here. It's very, very sloppy, very messy. So I hate to even mention it as being that because you got this massive pop right here following its earnings and then the sell-off thereafter. So sideways until it can do one of two things: break above this 3,000. Maybe you can play it off of this bounce if you're really that crazy about getting into it. You got to move up to 3,000 from 2668. Stop loss would have to go below 2486. But then again, I don't know if you're really getting that much of a reward to risk ratio that is in your favor. So everything I do, it goes back to reward risk. Reward risk has to be at least 2 to 1 for me to be interested in making it as a trade. On Google, it's kind of pushing those limits there. Yeah, even SC, he's been in that channel saying it's been super frustrating for him. Yeah, that's the worst because it's a time killer on your capital. Your capital is just going back and forth and it's not doing anything, and it could be in a different trade. That's why I don't like getting it stuck in these channels. CCJ. This one's come up a few times for me today. People mentioning it. So just trying to draw the chart on this one. Breaking out today. Let's see. Yeah, this is hard to get a real good feel for where it might want to go. I mean, it's in a good sector with the metals. Metals been really hot of late. You got like an inverse head and shoulders pattern here. So left shoulder, head, right shoulder, and it's trying to break out. It's just really messy on the price action front. Okay, so I don't want to say like stop loss at 22 because it's trading at 27. So on this, you probably have to be really aggressive with taking profits along the way because we are in a market that has seen plenty of rallies like what we've seen today and then reverse them the next day. So, I mean, let's just look just to refresh our memories here, right? 4-day rally here, reverse, back lower. We had a massive 2-day rally here. We came right back down again. So big rallies big reversals. Expect that. Okay, that's what we're in right now. We're still having declining trend lines. We still have a market that has been trending lower. So topping pattern with a head and shoulders pattern as well. So CCJ, brilliant move today. I wouldn't go chasing it here. Why? I mean, look at some of these stocks that you can go chasing, right? Look what happens to them eventually. Look at that one. I mean, ENSV, right? Another one. Don't go chasing these things. So CCJ isn't as exaggerated, okay? It's a much different company than those. It's nothing near as crazy as that. But you don't want to go chasing it at 27 either when there's not a really good stop loss nearby. If you're already in it, then you can start taking profits and making sure that you're diminishing your risk on the trade as it continues to go higher. Apple. Let's look at Apple here. Solo M Dog wants to know. So Apple has a little bit of a bull flag here, and I highlighted it today as well. It's got me curious because I wasn't necessarily expecting that. You also have a long-term trend line that goes back to July of, what was that, about 2020. So this trend line plus the bull flag, it's bouncing off of it. It could kind of get interesting with this one. You could also say, well, there's a much bigger trend line in place as well. If you go, or not necessarily bigger, but if you go back to, what is that, September on the chart. So you have this trend line as well. You have the bull flag, so it could just go right into that. So there's different ways to look at it here. But I would watch this trend line as well on top of this trend line. There's a lot going on there with the stock as a whole. But yeah, regardless of the trend lines, watch this bull flag pattern because I really think it's an interesting pattern. If it breaks back above 172, it got an upgrade. I think somebody put a price target of 215. If it goes up to 215, that's a pretty good move. But it needs to get back above like 172, 173 first. All right, let's look at Bitcoin. EOG is wanting to know, and that was part of the show as well. Pull up my other chart for this guy. By the way, too, futures on the oil, right? I talked about this in one of my recent videos on oil. Massive support level, or resistance level, we went right through that this past week. No issues at all. Actually, it was last week. But today you had the news about Iraq expanding capacity, and it pulls back flash crash style. But where does it settle in at? Right at that support level. So keep an eye on that. Okay, maybe you get a little bounce off of that in the coming days. Now, Bitcoin, where are you at? Big rally here. It's up 8.1% here in recent days. A lot of choppiness, though, guys. I saw one chart from a guy I follow on Twitter. I can't remember his handle right off the bat, but looking at the 5-minute chart, it's pretty interesting here. You had like an inverse head and shoulders pattern here growing. So you got your left shoulder, head, and then you got that right shoulder, and then it just broke out in dramatic fashion last night. And so it's kind of held onto those gains pretty well. On the daily chart, though, it's very, very, very choppy. You also have this massive double top pattern. Hasn't confirmed the double top pattern, but it is developing. It needs to get back above this $45,000 level. If it does get back above 45, I think there's a good opportunity for it to attract some new traders, new investors that think that, okay, it's going back up to 70,000. I don't want to miss this train again. So there's a potential if it can get back above those levels, let's say 46,000, it can clear. That's going to attract a lot more buyers again, and maybe you finally get that push into the 50s. So choppiness, it's in a sideways range. There's probably a lot of frustration there. I own some Bitcoin. I don't, mine's more from a long-term perspective, just trying to be diversified in that way. But I would watch for whether or not it can break that $46,000 level. On the flip side, this resistance or this support level breaks, that confirms the double top, and that means it could get much, much uglier. Maybe even get into the 20,000s. So keep an eye on that. What else we got? GDX. Let's pop that one. So pull back on gold today. Look at this massive resistance break that GDX has recently had. So I was kind of curious to see, maybe we'll get a pullback here to like 35 today. Considering how much that market was rallying, I was really hoping for it. Gold was down like 2.3%, but it didn't really do that bad. So to me, that this trend is like still well intact here. That's a really nice trend line there, in fact. But that base pullback to the base, that's really what I would like to have to try to play that bounce. Not sure we're going to get it anytime soon. This trend line is still well intact. So as long as that trend line stays intact, the trade in GDX is still intact as well. Really nice chart. NVTA. All right, let's look at NVTA, Kyle. That support is broken, right? Not looking good there. Still a declining trend line there. I don't see anything that really... Okay, I'll take that back. You do have a little bit of support there. Pull that sucker down there. All right, let's get rid of this support level. It's already broken that rising trend line, but it is testing this support level going back to 2020 lows. So it's right at those March COVID 2020 lows. Can it hold and bounce off of it from there? That's going to be the big question. I wouldn't necessarily play the bounce off of this level here. Instead, I want to see it get back above the declining trend line first. The more aggressive approach would probably be to play the breakout of this basing pattern here. So if it can break above this basing pattern, let's say get above 1147, there's room to possibly go up to $14. So that's another way to play it, because you would have a not only a basing pattern, but a nice little double bottom, first bottom, second bottom off of support. So two ways to look at it there. Again, breaks this support level, I don't want nothing to do with it at that point. It's just in a free fall, right? So this is going to weigh on the price. So if you get a good bounce out of it, know that it could bog down at this declining trend line. Tesla, I was wondering when that sucker would get asked. Let's look at Tesla. This trend line here is kind of been where price continues to rally above and rally below. It's not sure if it wants to hold it or break it. You also have this declining trend line right there. So let's draw that. Make sure I'm drawing this sucker right. Yeah. So broke that declining trend line. It's a choppy, very, very volatile and choppy mess. So you also have, I've never had to draw so many lines in my life on a single chart. That's a lot of price pressure, right? I mean, you got price resistance here. You got a declining trend line that it has broken, but you also have a broken trend line here that it's trying to retest and recapture. I'm not so sure that there's a really good reason to get into Tesla at this point. So, and I like Tesla, man. I have one. I think it's the best car I've ever driven. Just not sure I'd be buying the stock here. All right, let's look at TELL. Then we'll go to Disney, and then I'll look at the VIX, and we'll wrap this sucker up. TELL. Holy cow. Volatility City, man. Thing's got a beta of like 10 or something. Good grief. So it's gone from $2 or a little bit above $2 up to $4. So it's almost doubled since the beginning of February. Understandable from considering what we've seen in the oil sector, right? But it's very volatile. I mean, if you were to trade it here, let's say you play this breakout, right, that it hasn't been able to sustain. It's trying to break out, hasn't been able to sustain above it. If you get in at like 414, where are you putting the stop loss at? Like 357? It's like a 12, 13% stop loss. I'm not huge about trying to take those big of risks on stocks. I know some of you guys are. That's okay. But you have to trade what you're comfortable with. I wouldn't be comfortable trading with TEL, especially with some of the flash crashes that we saw in crude today, where, I mean, gosh, where did it go from? Like in a moment, it went from 115 down to 103. Those are massive swings right now. And I think that It's better to play a much bigger pullback in oil and try to play that bounce rather than trying to chase after it after it's made already some big moves. And Disney, and I'll throw in LEU as well. DIS. I was watching Disney back here because I thought, okay, maybe we're going to get like an inverse head and shoulders pattern. It never formed, or it was forming, but it never confirmed. Right? And then the bottom fell out from underneath it. So maybe there's like a double bottom here going on. That would be the next thing I'd be watching here. Remember, technical analysis isn't meant to be perfect. It's guidance. It's guidance to help you, okay, this is what's happening. There's maybe a bullish pattern here that's developing. Support levels, as much as they're meant to be held, they're also meant to be broken. Same thing with resistance. Much as they're supposed to be tested and reject price, they're also meant to be broken as well to the upside. So you got to remember that with technical analysis. It's we get mad. We think technical analysis doesn't work when it doesn't conform to what we want it to do. So with Disney, you have a double bottom here. And the key is going to be going forward. Can it get back above this 156 level? Let's just say 156 for making it easy. If it gets back above there, I think there's a potential for it to run maybe back into this mess here in the 170s. I mean, that's a heavy resistance level. It starts at about 169 and carries on until about 186. So that's really messy. That could eventually, like, you know, churn price movements a little bit going forward. And then LEU. Look at this one. Nice base there. Yeah, it's a good base, kind of like a double bottom there. It's breaking out of it. I don't think I've ever traded this stock before. Stop loss wise, I mean, yeah, it's volatile though. Good grief. It's up 10% today, huh? Some people can churn it, right? I mean, some people can handle these kind of price swings. I don't think long term it's a sustainable strategy playing with massive stop losses. In this case, I would have to put a stop loss around 38.89. I mean, that's like almost like that's like $11 stop loss. So then you need like $22 of upside. So what do you need it to do? You need to go up to like $72. So in order to justify the trade, you guys say to yourself, in a bad market right now, in a market where there's some massive sell-offs, yes, massive rallies too, but we seem to have more of a tendency to keep trending lower. I want this stock to go to $72 to justify this trade. That could be tough in this kind of a market. That's not really something I want to sign up for. So be careful. I like the chart pattern. I like it. Take away the volatility and the price action. I like the chart pattern a lot. I like that it's holding this 200-day moving average pretty well. But the reward to risk ratio is a little bit out of the park. Okay. VIX. The reason why I want to close with this one. Again, the massive, just a very stubborn resistance level here. We actually got above it for 2 days. We sustained a move above it for 2 days. Saw a 7.6% pullback, which was interesting because you would think that you had the S&P 500 rallying 2.6% today. That we would be down at least like 15, 16%, way into the 20s. But we're only down 7.6%. So keep an eye on that. It wouldn't take much for this VIX to reverse and recapture this level. But in the past, we have consistently sold off and bottomed in equities when VIX has hit these levels. And maybe it is happening again. Maybe just a little bit late this time. But it's definitely not as precise as it has been in the past. All right, guys. Takeaway here. This is the takeaway. This is what I want you guys to walk away with. It's okay in these kind of times to trade less. I have traded less right now than I ever have, but that means that I'm also able to control the emotions better, able to control the risk better, and I'm profiting completely fine with trading like 1 or 2 positions, taking profits consistently. That has been a huge help, especially like, let me tell you, I don't enjoy taking profits in my trades along the way. When I'm up 5 or 6%, I'm thinking, okay, I can see a clear path 10 to 15% higher from here. And so the last thing I want to do is take profits in those trades. But when I do that, I usually almost always am glad that I did. And that's the case like with today. I'm glad that I took profits along the way on my QID trade. I took some at 5%, I took some at 10%, and I closed it out at 7%. But I'm glad that I had those moments where I took it out at 10%. That was a big deal. So same thing with the RWM trade. I took 1/3 out at like 2%, 2.5%, and then I closed the rest of it out for a small loss, but I was able to make like 0.8% on the trade. That's a big deal because it adds consistent profits to the portfolio along the way, keeps the emotions in check. And that's one of the biggest things you got to do in this market. The best way to do that, taking profits, raising stop losses, and trading less frequently. Don't force your will on the market. Don't force your need to trade on the market, because the market's usually going to penalize you for that. Be careful out there. It is some of the most difficult trading that I have ever seen. I've been doing this for since I was 11 years old. Some of the most difficult trading I've ever seen. And that goes for everybody else too. So thank you guys. Make sure you click the join button down below to become a member of this YouTube membership so you can get all my market research each and every day. And make sure to like and subscribe. Thank you guys, and God bless.